Thank you, Angel, and Heidi ho, everyone. Happy hump day to you all. Hope it's a good one. And thus far, it's been good to you, maybe just in life, but in trading also. Little change to the format. We're going to start proceedings each and every day with an update on trades that are in the market. Kind of do that sometimes anyway, but let's do it all the time, huh? And I'll continue to update this sheet as need be. Did I share my screen? No. What a goose. Okay, there we are. So positions that we've got open at the moment, Euro CAD that we sold on the 14th of January. Yes, it's still going. And we've hit TP1, we've taken the TP2, and our target is 1.4030. Aussie CAD, we sold into the market on the 27th of the 4th. And pardon me, we've hit TP1, we've taken TP2, and we are 0.925 as a target, 0.925 as a target. That's the current status of the trades in terms of risk to reward. Not necessarily your cash, but the risk that you took versus the reward that's currently available. Pound CAD, we sold, lots of selling going on here, into the market on the 28th of April. And we hit TP1, we've taken TP2, and our target is 1.6900. And Aussie yen is the only one that is now back beyond our entry, but we have taken TP1 on that. And of course, the worst that can happen there is that will be a break-even trade. And our target, should we be fortunate enough to get a reversal now, is 0.8315. Of course, we've got Aussie following gold and, of course, following the Kiwi up the ladder. Kiwi had some good news, as I understand it. Pending orders, pound Kiwi is a buy on I haven't got the entries in there, so hang on, let's go to that. Pound Kiwi is a buy on the monthly chart. We may have to reassess that after today's Kiwi news, but let's see. All is not over. We haven't obviously been entered into that. We may reassess before the weekend. What else have I got at the moment? Pending Euro Swiss and Euro Dollar. Okay, this morning I took a Kiwi Swissy as well. We're looking to trade this short underneath that bar. And as I said in the Telegram group, I think we can now safely dispense with that order. That hasn't even got an interest from the market, given what happened with the Kiwi this morning. So that one's gone. Another one that we entered an order that we entered this morning was Euro Swissy. Now, Euro Swissy trading pretty much the same thing. We're trading this bar here. If you want to follow that one, there are the parameters around which I have chosen to trade. So selling at 1.0945. We have, g'day Paul P, a stop loss at 1.0987 and a take profit at 1.0930 if you're interested in following that one. I did take another order today. We had a daily order on Euro US dollar short yesterday underneath this bar. I've chosen to move that underneath yesterday's bar. And same trade pretty much, except really I'm trading a false break of that range. So if this is to be a false break, I think the buyers are going to be wrong at that point. And that's where we'll get into the market. We'll take our first profit just before the weekly pivot. So the sell order is at 1.2207. The stop loss is at 1.2271. And TP1 is at 1.2185. Now, if you are not familiar with the way I trade, what we need to do at TP1, guys, is take 50% of our risk off the table and move our stop loss exactly the same amount of pips that we took at TP1 from entry, thereby giving us a free trade. That's the whole idea. And you need to follow that if you're going to follow my trades, because that's exactly how I do. If you want to follow them with my management thereafter, then you need to be in the Telegram group. The Telegram group can be joined in the links below. All right, that brings us up to date. Ash, of course, took a winning trade yesterday. That's now closed. and we'll see if he can come up with one. He's studying hard at the moment, getting the late mail for us, and he'll be here very shortly, and see if he can find another little squeeze out of the Ftse. We shall see. Rightio. Now, are we going to trade? Those of you who are here for the first time, we normally look at the pound US dollar. We were trading this indiscriminately as a breakout trade, first candle of London session, which we now have. The parameters around which we're trading this at the moment are the range of the previous 2 days, or including this day. I think that's pretty much the case here, but is it a range that we want to trade? Still about 80 pips. We're bang in the middle of it. I'm less inclined to trade it, I've got to say, than I well, not that I should be. This range is now pretty established, and as I said, we're bang smack in the middle of it. Look, I don't see any value here, because what really has to happen for this to give us some money is it's got to break out of the high, and then it's got to go further. It's got to break out of the low, and then it's got to go further. If there was a news announcement around which I could say, all right, this now makes sense, let's see if that's going to be the case. And what I mean by that is there anything fundamentally or data-wise that could probably give us a breakout? And when I have a look at this, what I see, today is the 9th, no, sorry, today's the 26th. I don't see anything here that's going to do that, frankly. There is meager news left. That's May the 19th. That would make it far more interesting, because we know the results. There, as I said, very little left. Crude oil inventories as usual on a Wednesday, sorry. But I don't see that affecting the pound too much, to be fair. Now, of course, what we're looking for in those breakout trades is a breakout and trend. Basically, we're looking to start a trend. So I don't see that as being a distinct possibility today. And for that reason, I think we're just going to bounce inside this range. That may give us an advantage, given that I'm a range trader, a little bit later. So if we find that we've come off the bottom of this range, let me put the range in so you can actually see it. That would help, because what I see is not necessarily what you see. So there's our range in there somewhere. That'll probably do us. Question mark, have we been to the bottom of the range? And are we now looking for a higher low to trade it to the top of the range? Well, I'm really not convinced either way. And as I said, we're bang smack in the middle of it. It's likely that we're just going to go either down here or up here and then repeat the process. As I said, if I get that indication, then I will look to trade it. But actually, at the moment, I say no. Question from Subra. For your trades, usually TP1 is set at only 15 to 22 pips. Any reason for that small amount for TP1, and normally where will you place TP2? Great question, Subra. And g'day, John. Here's the thing. With most currency pairs, I won't say all currency pairs, I'll say most currency pairs, they have a defined parameter around which they're going to trade intraday. That's in my opinion. If you don't follow that, then fine, I get it. But I believe that most often you will find that currency pairs will range rather than trend. And for that reason, I tend to trade inside ranges or back inside ranges, and sometimes as breakouts. So when I'm looking to trade away from an area, let's describe it as around the pivots, right? Because this is where price spends most of its time. If you don't believe me, then just look at the chart, because the daily pivot obviously is a leading indicator as to where price may well be at some time during that day. Now, when we look at a daily chart, and this one would be a classic example, all you need to do is have a look where the daily support and resistance areas are. So DR1 up here, DS1 down here, and you'll find that most times inside a day, price will vary not too much outside of those areas.
I have
So
a
for
trade,
that,
mate.
righto, mate. I promised them you would. So away you go.
Yeah, we are going long Ftse. Gonna have to get on top of this, guys. Long Ftse. Let me just share my screen. And here we have it. Should get the opportunity here. There's a little trend line here, so you won't get quite the same price, but I think it's okay. So we're going long Ftse, and I'm just going to print up the levels here. The price that you really want is about 28. You know, if you can get this price, but you're in the right zone here, so anywhere in this area is absolutely fine. And it's going to be one of those that I think we probably just see if we can get back to the highs. I'm just trying to find first contact, but I quite like the price action today, and it might be one of those things. I think the target is going to be right the way up here. So we're looking at 70.60 as the target. This low down here is the stop loss. So 70.11. I'm going to print this up on the screen. So you're looking at around about an entry of around about 70.28 if it will come back to that particular point. Let me just do this. Sorry, it's all a bit manic. Entry 70.28, and you're circa that area. Target, so the take profit is 70.60, and your stop loss is going to be this low here at 70.11. So stop loss, let's call it 70.10. So you could be looking at a 1.5 to 1. You know, depends on where you get in. If you're sort of around this area, you've got enough room, really. You know, if you do have to enter here, this is quite a nice distance away, so you've got enough room to take advantage of a decent run here. But I think we could well get back to the highs, and possibly beyond as well. But I'm just trying to find, as I say every day, I'm just trying to find first point of contact. Now, the strategy may end up being tweaked, meaning that we can let things run, because actually yesterday the entry was here, coming out here, but look how far it went. You know, it went a whole 1% really to the downside, if nearly 1%, and near 1% move on the Ftse to the downside yesterday. So there was a lot more on offer. So this could go higher, and as I say, over time I will be tweaking the strategy. But for right now, I'm going to continue to come out of first point of contact, and then I will analyze the data as the close of the month comes in, and see if we can just squeeze a little bit more out of this. But at this stage, good morning, Lewis. At this stage, it's quite a high probability strategy. So high probability strategies do tend to be they don't tend to be strategies which give huge rewards. So at this stage I'm not really aiming for the huge rewards, but what I am going to do is just tweak it a little bit, just see if we can get an extra few percent out of it. Now, what's the other thing? Let's put this line in as well. So you can see that this would be a significant level to have to get through. It's on the 4 hour, but really it is on this daily pattern, and depending on what the pattern is, because you often have patterns within patterns. We've got this head and shoulders pattern here, this one going on here, which is kind of like still creating, but we're sort of within this symmetrical triangle. It doesn't really matter what we call it, but you can see that if we're looking at different points of support and resistance, different points of support and resistance, you can see that the price has been caged in this area. Now, of course, if we do take profit at this 70.60 area and come out of the trade and it explodes to the upside, there is a chance that this will all be missed, and there's a decent move higher as well, potentially right the way to this point to 7,400, and it's just going to be down to everybody's appetite for what they do and don't want to do. But the reason that I'm continuing to stay on track with it is that it's still in test mode in many respects. You know, what I've worked on more is the entry, and this is why it's become a high probability trade, because the entry is good. You know, I've got some good entries here, but I need to work on the exit, and that's how we're going to get high probability trade with decent profits as well. So we'll see what gives with that, and you might well get the price. You might get your 70.28 if that's what you choose to do. So there we go, mate. There's a little trade to start us off with. Let's see what we got. A diamond formation. It does look like that, actually, doesn't it? Let's have a look at that, because that's actually potentially quite negative. I mean, the diamond formation is associated with bearishness, and yeah, I think you could make that argument as it goes. And that would still qualify this as a take profit area, because if it's going to break down, then there's a chance we come down here. So we're either at 7,400, or potentially, you know, we do break down and we end up down at this 6,600. So it's really a 400 pip move one way or the other in many respects. It just depends on which way it breaks. At this stage, I don't see reasons. I'm just having a good look through this now. Yeah, at this stage, I don't see reasons today anyway that the market breaks to the downside. So I will come and do a little bit of a review on markets and the sentiment in the market when Jeff's finished, but because I don't want to continue to keep cutting him up. But we've kind of agreed that if there's a trade that takes precedent. But
oh yeah.
But by the same token, I know you're in a flow, mate, when I come in and just butt in. So I won't do more analysis on this right now. Let's just see if we can get everybody making some money today, and then we will come back to analyzing it later. So back to you, and
right,
we'll see if we get the money out of this one.
Okie doke. And of course, coming up in the show today is the Golden Girl. We believe the Golden Girl will be in anyway. Haven't heard from Ainsley to say that won't be the case. So I'm sure she'll be all smiles with gold now nestling above the 1900 mark. Interesting.
Yes. Yeah, it's doing really well now.
Have you got my right chart? Yeah, you do. Okay, cool. So I was answering the question for Subra. And he asked me that most of my trades have a first take profit of between 15 and 22 pips, and he wanted to know the reason why. Well, the reason why is mainly I'm trading day trades, right? So when I'm trading day trades, I take particular notice of where price is likely to go in relation to where it's always wanted to go in the past. And outside of that day, it's generally not a whole inside of that day, it's generally not a whole big distance, right? And the daily pivot is always where I base everything from. And here's why. And if you haven't seen me do this exercise, I'll just do it very quickly. And for those of you who have, I apologize for the repetition, but it's a very, very simple process. And what we need to do is isolate DS1 and DR1. And you'll see why when I do the exercise. So we want to add DR1, which is number 1 on the colors chart. We want to make it a little bit bigger. So we'll make it number 3, and style doesn't really matter. Then we want to have number 4, which is DS1, and we'll make that a different color. Let's make it yellow. No, let's make it white. No, we can't do that. We've already got white on the chart. And then we go to inputs. Oh, I didn't change the width of that. Hang on a sec. There we go. Then we go to inputs and we show all support and resistance levels. That's what we want to do, yes. So we make that true. Click that, and here's what you see. Now, what that actually shows you, if I put it on a 4-hour chart, it's a bit busy, isn't it? What that actually shows you is how often price goes outside of that zone. And if you can see what I see, you'll see it ain't that often. When it does, it goes on a rant. There's no question. But most often, it's staying inside those zones. So that's why I take profit early and trying to avoid this kind of thing happening, this kind of thing happening, this kind of thing happening, this kind of thing happening. All the time, I'm looking to avoid those. I won't even call them whipsaws, because within a day, price moves, quite substantially, but not necessarily away from an area. And generally, they're inside that area. So, and it all comes down to the average range of those pairs on a daily basis. So, if you then go and work out what the ATR is, it's generally going to be, on euro dollar in particular, around 70, 80 pips. And therefore, if I'm in the middle of that, 40 one way, 40 the other, let's say, how can I take big profits on an intraday basis? I can't. So I've got to take a small profit as TP1. That gets me safe in the market straight away. And if this happens, so be it. That's fine. We can pick up TP2. If it doesn't happen and we come back and just like this one did, if that happens and this one did, then we're safe and we don't lose. So that's the whole point of the exercise. It's because I'm old and very conservative that I like to get risk off the table very, very quickly. So the 15 to 22 that you mentioned, Subra, is primarily based on how much room we've got to get profit on an intraday basis. That said, I will change that if I'm trading on a bigger time frame. This monthly trade that we're still in on Euro CAD that we took on the 14th of January, we traded this bar here, and I think our first take profit was here, which was like, I don't know, 300 pips or something. I can't quite remember, actually. I don't quite remember, to be honest. I'd have to look that up. But, if I'm looking to trade a big reward thing, then that 15 to 22 is not applicable. And to answer your TP2 is always going to be as a level of support or resistance. So whether that's a trend line, whether it's a horizontal level, that's about all I use, really. I don't use Fibonacci. I don't use anything like that. I don't use moving averages, but it's generally a pivot, a trend line, or a horizontal level. That's where I'll take profit. So if I see, for instance, that level there, which is very, very clear, you have to take profit there, and we did. So I hope that answers your question. That is why I do what I do. Going back to the two orders that I placed this morning, let's get rid of this. Oh, it's not. Did we? Yes, we did. We're selling the daily, and here's why. As I explained in the Telegram group this morning, if this is a false breakout, then the people who bought this euro dollar yesterday are going to be wrong at some point. Just let me get rid of that and that. And the point at which they're really going to be wrong, in my humble opinion, is going to be actually where they started the rally from. So I think they're going to be wrong here. And if they're wrong, then price is going to here at least, which is where we'll take our TP1. And potentially, if this reverses, and why wouldn't it? Because don't forget, I've got a clear false break on the monthly chart. I've got price, this hasn't yet closed above the ascending channel on the weekly chart. And that breakout that we spoke about yesterday of the range is either going to be true or false. And again, if it's false, I want to take advantage of that quickly and let it go down to here. So I've got everything pointing to the downside for euro dollar. And that's why I placed that order there. On the other one, Kiwi Swissy, which just shot through because of the news, and I don't even know what the content of the news was, but we were never in danger of being entered on that. But what I saw here was pretty much the gap underneath us. And I felt that we had already broken that level and retested it, rejected it. And then, of course, news has pointed us in the opposite direction. That's awesome, because that takes us to a confluence area, and one of two things, in my opinion, will happen here. Over time, it may consolidate for a while. It's either going to break the pivot and the confluence, come back and retest it, in which case we can look to trade it long, or it's going to, well, three things. It can bounce off there and we'll look for a lower high, or it can come above, get back below, retest it, then we look for the short. The only other one, euro dollar, I said euro Swissy is exactly the same trade as Kiwi Swissy, but obviously the euro didn't get the news that the Kiwi did, and for that reason we are still still in this, or the order's still alive, and so far it looks like it may have an appetite for the downside, and the clear TP1 has to be taken, getting back to that that longer or end of day strategy, Subra. It's a support level. That's where I take profit, and that's a horizontal level this time. Second take profit will be down here at the bottom of the range somewhere, I would imagine. And that is it for me, pretty much for the day. On the smaller time frames, now you just know I've got to buy a short euro dollar, right? Not that I like the dollar at all, but I'll be looking for this to come back inside this range. Already got a double top here on the smaller time frame. So anything in here, and maybe even coming back to the daily pivot, give us that lower high that we're looking for off the back of a double top. And I think that's probably where I'd like to get in. So that's going to be me. There's an alternate to that, and that's going to be support, break, and retest, which will be there. Look where it stopped. Bang on it. Amazing. Oh, it hasn't stopped yet. Your 4 cents were on pound US dollar short on H4. Let's have a look. 4 cents. Okay.
Just incidentally, mate, I don't like the way the FTSE's looking right now, so I'm actually looking to close the trade, but I'd quite like to close as close to entry as possible. So I'm going to be waiting until it gets back up to 70.28, and then I'll be closing the trade if it gets up there. It's about 70.20 now. So a little 8-pip push to the upside from this particular point, which could happen. It's on the daily pivot. I'm going to close it down. Don't like the way this is looking. This doesn't look as strong as I'd like it to give me the opportunity. It does mean that it may still hit that profit area, but I don't like the features of this anymore. So I'm going to be coming out of this trade if I get the opportunity to come out of break even.
Right, mate. We've got an absolute classic slingshot trade line here, Lewis. I like what you're seeing. What I don't like is pretty much what I said from the outset. I think that pound US dollar without a driver, and I've got no idea what that would be at this point in the week, it's just going to flail around in here. We've got the pivots very close together, and what I'd really like to see here is price get down to the bottom, then come back inside, retest that, then we can look to trade it, or I can look to trade it long. I totally see the setup that you're seeing, and I do like that particular pattern, but I think it's out of context for me. I just don't like where it is. The
closing
other thing,
here, mate. Sorry, I'm closing it here.
Yep.
I'm only sort of 2 pips away, so I'm just shoving it out here. So coming out of break even, actually, it's just got to the 28. So anybody that wants to close it at the entry price, then either do that or stick with it. It's up to you. But as I say, doesn't look as good to me, so I'm going to close out and wait for an opportunity during the US session.
Cool. So yeah, I'm not going to trade it short at the moment, Lewis, because I'm be trading straight into DS1, straight into the low here. So it's just not my thing. If it were to break and come back and retest it, different story. But no, not yet. And what I really see is a pretty clear, and I'll zoom in on it for you, a pretty clear double cross of the daily pivots and the weekly pivot, which we haven't seen yet this week. So that may well be a long, I might even place that order. I'll see how the candle closes, but we'd be risking 40 odd pips. Yeah, I think it's okay. So we'll have a look at that when the time, that's a 4-hour chart, of course. We've got an hour and a half to go. I'll tell you what I'll do by the time we close the show. Hourly and 30-minute, I'll have a look at that quickly. but like I said, I think it's a range trade for me today. There's a trade line through here. That would be good. That would be good. I'd go with that. If we could get back above here, not now, after a couple of candles, back above here and retest it, then I think that long is in play. At the moment, I reckon we're probably going to test the bottom of the range, mate. That's where I'm at. So Ash, that's pretty much me, mate. Done and dusted.
Well, let's talk about this Ftse trade, and just so everybody understands why I've done what I've done. So there should have been little to no loss on this, depending on when you decided to come out. But let me explain this. When this initial kind of area was broken, it was looking pretty good. That initial area was looking pretty good. So I was just looking for that extra little push to the upside. Looks like we might have had maybe a better first point of contact. It's a bit messy, so not quite as easy to see. But when it pushed to the upside, it looked pretty good, and it looked like it might get there. Now it still may, but that's not the strategy that I'm trying to achieve. What I'm trying to achieve is the open, and the reason that I'm trading the open specifically is because the open is the most liquid and it's the most volatile. So it means that I can get profit quickly, potentially. Now, it did come out of the traps really well, so I thought maybe we would get up there. But then when things start to turn around here and come back inside this area, obviously when it starts coming down here, there's always a danger that it just hits the stop loss. But because this is a resistance zone, then the suggestion here is that if it comes back up again, that would be an area that people could potentially go short, a better area for people to go short. So it gives us an opportunity to close the trade at break even. And the reason I want to close it at break even is because we're down now under this level rather than above the level. So it's just the way that I trade it. Now, as I say, if this goes to the upside, the reason that it won't matter is that this is not about, of course, the byproduct is about making money, but trading isn't really. If the way that I see it is that trading is not about making money. It's doing a process, and it's doing a process correctly, because then I know over time the money comes in. So the process is, if it looks like I'm wrong, it doesn't matter how much it looks like I'm wrong. If it looks like I'm wrong 10%, then I don't want to be involved, because what this suggests to me is that it's either going to get quite rangy on a very, very small time frame, and we're not going to get those profits relatively quickly, or I'm going to get stopped out. So, and of course, or it could go to the upside, but that's not what this is currently suggesting. So I prefer to just to clear out the way. I want high probability trades, and if that means that the probability is now decreased, I want to be out. So that's why I've behaved in the way that I have. Now the RBNZ, I think it was a bit of taper talk, mate. It sounds like they might have been quite hawkish.
I just read the headlines just now, and the headlines are saying that they're just continuing their QE and they're keeping the interest rates at 0.25, obviously. So I'm not sure why that's bullish. I didn't read the statement, of course. I'm only reading the headline. So there must be something in the statement.
Yeah, I haven't read it either, but I do know that. I do know that when I was watching Bloomberg earlier on, they did mention something that was in the statement that sounded quite hawkish. So I think both the Aussie and the Kiwi got a bit of a pump from that.
Yeah, they tend to follow each other.
Not sure how long that will last. With the pump to the upside, that is, the Aussie had a decent pump to the upside, but I'm not sure whether that will last or not. Really, we've got obviously things from the Fed out on. We got obviously things from the States out on Friday, which are going to be more significant, and maybe that's really what the market will wait for before it chooses a specific direction. But
I suppose also, not that I watched them at all, but commodity prices are still on the rise, are they not? Well, certainly gold is. So
Oh,
I'm
gold
assuming
absolutely is.
everything's
Yeah,
going with it.
yeah.
And that of course is buoyant for the Aussie and to the Kiwi to some degree, but the Aussie most certainly that's an issue if you're short the Aussie, I guess, at the moment. But what goes up must come down.
Well, I mean, I am short the Aussie, and to be honest, I'm quite happy to stick with it because okay, we've had a big boost to the upside, but I need to read the statement just to get an idea of what has been said. But ultimately, it's still rhetoric. It's not action. And it doesn't mean that the RBNZ are going to move first. It just means that I mean, it could be a head fake, because obviously, as we sort of saw with Draghi over a long period of time, one of the best ways to manipulate your currency is by doing nothing but talking the correct game, and he was very, very good at it. So it might just be a head fake. It might not be anything specific. It might be that for whatever reason the RBNZ wants a higher Kiwi for right now, to give them more purchasing power abroad. I just don't know. I don't know what it would be, but it might not be anything in it. So even though we have had this boost to the upside, without reading the statement, I'm guessing that it might just be just a bit of a transient thing. It kind of like pumps to the upside, but then actually it doesn't really do anything from here on in. Which I might be wrong of course, but we'll see on that. But yeah, I don't know, mate. I'm still bearish the Aussie. I think that many things that were reported for the Aussie are probably priced in, and it has been on a bit of a tear to the upside, over the last few months. But we are seeing weakness in this area, so it is kind of suggesting that the market is now saying, "What else have you got?" Because if you got nothing else, then the next, I guess sensible thing to do would be for the Aussie to weaken somewhat. I don't know how much, but I still think that this weakens somewhat. I've still got Aussie yen that I'm short at, and
Yeah, mine's just holding on. My
it's
Aussie
just
yen.
yours is holding on. Yeah, I mean, it's getting to the point that the swaps are going to start eating into any profit that is available. But it's still possible that if we can come anywhere down there, we're really. I need to break this level. I need to break this head and shoulders, which is still in play. It's still a daily head and shoulders pattern going on here within this rising wedge. So actually, it looks more like a channel. But within this channel, so I'd like to see at the bottom of the channel to kind of pull the trade, but it might actually break through from that point. But I'm really looking to pull the trade because I would have thought by now we would have been off to the races and going somewhere, but we just haven't. And it's getting to the point where I'm going to have to think about a different management for this particular trade, for the Aussie yen, because the trade really should have cleared out. I mean, I don't know how long we've been in it, but it's been some time. I'm relatively sure that it was before.
I think you were in before me, and I got in. Actually, I put that up earlier. Aussie yen. I got in on the 24th. No.
Oh, John's Aussie Swissy is still running. Let's have a look at that.
Yeah, he got the right one.
Yeah, you
Aussie
did get the
Swissy.
right one, mate. Yeah, you did get the right one, and I suppose you may well get down to this point at 68, for your particular trade, and you've got the weekly pivot as well as a resistance area. So yeah, you look okay. You look in pretty good shape, mate. Yeah, you should.
19. Sorry, you go.
68. Yeah, I was going to say 0.68 looks pretty good, but I still think there's a chance. And it might be that the market participants are taking their guard down a little bit. I think that there's some trust now that the Fed aren't going to be raising interest rates, so that's possibly why we are seeing equities push to the upside. And cryptocurrencies have started to kind of stretch their legs back to the upside as well. Now, I don't know how long that lasts, but it looks like we're kind of back to this possible risk on scenario. It might end up, as I say, it might end up being just a short-term move, but this inverted head and shoulders that we saw created on Bitcoin has started to play out relatively positively, and it's worth looking at Bitcoin to kind of get an idea of market sentiment. But that's what we've got right now. We've got this inverted head and shoulders, which does look like we could get a further push to the upside. As I say, I don't know how long this is going to last. Might be to that point there, but at least it looks like we might actually start to carve out a low here. So we might, if we are going to chop around, it might do something like that rather than going, rather than just plummeting to the downside. But I've noticed it with the NASDAQ as well. You know, there seems to be a bit more confidence coming in with that. October tends to be one of the worst months of the year for the S&P, which suggests it's probably the worst month of the year for most other equities around the world as well.
What was the retracement on Bitcoin, mate, in terms of percentage? Did anyone work that out?
It's got to be near 50%, but let's have a look. So the high was at 65. The low, in accordance to this, is at 30, so more than 50%. More than 50%, mate. More like, you know, almost, I guess, almost 55, 60%, is that? Big move, mate. Massive. But
amazing.
Do you know what I find most amazing about it is the fact that that out of all cryptos, you know, Bitcoin's meant to be the most stable. So, you know, any asset class that can dive 50% really within a month, you know, within a month-long period. It didn't take that many trading days to get from the very, very highest point to this point down here. Does not suggest that it is all that stable. Now, you know, everybody knows how I feel about cryptos. It's just I think that the next way forward. But what's really interesting is that you've got the Chinese government, you know, trying to put in measures to stop, you know, too much crypto growth. The Bank of England governor, Bailey, said, you know, anybody putting money into cryptos is a bit of an idiot because it's not an asset class.
That's a bit rough.
Well, do you know, mate, it's interesting because when you think about who's saying it, like, well, of course you're going to say that. The last thing you need is a disruptor to the financial system because you guys control it. So you know, the last thing that you want is for a new world order. So unless an investor that is respected, and I'm not talking about Elon Musk because I think he's really burnt his credibility quite a lot during this period. But unless there's an investor that's credible that comes out and says what, you know, it's absolutely useless, or unless there's a group of them really, without then going, I've bought some like Ray Dalio did, then I think it's almost bullish to hear central banks come out and say and try and rubbish it.
Yeah, I know what you're saying.
It's just too good. You know, the crypto and blockchain technology is just too good to go away. And I suspect that they probably haven't got the brain power within the Bank of England to run a successful blockchain without what's going on right now, without the testing that's been going on right now, with all these kind of young and exciting physicists and mathematicians that are kind of building all this stuff. So inevitably there's going to be a load of crap as well, but you know, the stuff that's good is just amazing.
Yeah, look, true. And I like the fact that it's now diversified into far more than just an asset that you buy or sell, because there's far more to it than that. There's now a lot of, let's say, derivatives coming around it, and that kind of makes far more sense to me than does just pinning all your hopes on one particular coin, let's say coin.
Yeah.
Because that's all I understand. I don't understand too much about it, and that's why I don't trade it. But at the end of the day, like I've always said, I can't get into it because of that fact. If I don't understand it, then I just can't be there. I see the opportunities of buying at low prices. I see that, but yeah, I don't believe in it. That type of structure. Yeah, I think obviously that blockchain is a marvelous technology and will be used without question, or a a version of it will be used by things, entities like central banks and governments. I've got no doubt about that.
Yeah.
But whether that means Bitcoin's going to be the coin of
Yes.
choice is a
Yes.
completely different story.
Yeah, I completely agree, mate. I completely agree, and I suppose that's the key, is that this particular period and an area is no different than when you get stock prices that are way overvalued, because what will then happen is that everything will come down eventually, but the stocks that were rubbish in the first place won't pop back up again. So it really does become, a much more of a refined process, and you can't just go, throw an arrow at the dartboard with a load of stock names on it and say, I'm going to buy that because that's where the dart has landed. Now it's going to
Well, you
take some
can, but you
skill.
want to have very deep pockets,
Well, exactly.
and eventually they'll be empty.
Oh, John, just on the 70-28, mate. Yeah, that's where it becomes difficult, isn't it? If we mess around with an area that we can see is an action point, then it gets into my head anyway, and I like to think clearly. This is why I prefer to cut trades regardless if they were a winner or not. Because things have changed, but it does look like that 70-28 looks like it's popping back to the upside again. So as I say, this might have ended up being a winner, but my mindset is it's not a winner if the process isn't followed correctly. It's just a financial winner. Big deal. It's like going to the dogs or the horse track and picking a winner. It doesn't mean that you've got any skill. And it certainly doesn't mean that the same thing will happen tomorrow and the next day and the next day and the next day. So I think it's well worth picking out a price. And you're right as well, mate. I do think it will save the recording industry. And that's the point with it. That's where cryptocurrencies and blockchain, it's where they become brilliant, because it's going to save so many industries because of the protection against counterfeiting and kind of bogus items, because everything will be accountable. They will be able to verify where the source of things. So this is where the blockchain technology is absolutely brilliant. And as long as you get into the correct coins and the correct blockchain technology, then potentially, firstly, you'll make money. But the other thing is that you'll be supporting actually a better world and a better space. People buying Dogecoin and are making a fast buck out of that. Fair play to them and power to them. But it's not sustainable. And potentially, that they're the ones that are going to continue to shake everybody out, because it is just bogus. It's bogus stuff. I'm almost out with 50 cent loss. Well done, mate. Well done. You're in at 70.32, so I'm almost there. Well done, mate. Well done. So you're probably at break even. And as I say, you don't have to do what I do, but it's just that's just what that's my approach. And then it's just having the mental capacity to go. It would have been a winner, so what? Which is the way I'll look at it.
I'm completely struggling to find trades this week. Absolutely, completely struggling. I wonder how all my trading buddies out there are going. Got any trades, guys, that we can have a look at?
Well, John's got the Aussie Swiss. We know that.
Yeah. He's been that for a couple of weeks, I think.
Yeah, he said there's not a lot on. It has been kind of quiet, and this is the thing. This is where you start to go, now, what is the market waiting for? And I suppose it's the further development of the inflation story. This is what we got with gold, as you mentioned, mate. Gold beyond 1900 now, and really stretching its legs to the upside. Look at that trend. It's a classic kind of return to weekly pivot. Okay, it didn't do it there, but it did do it here. It's done it here. It looks like it's done it here as well. So it's missed the odd week in between, but lovely bounces off the weekly pivot with gold to the upside. Now, I'm quite happy to see gold going higher, but
Ainsley must be out celebrating. She hasn't joined us.
But Ainsley probably is, incredibly happy with this move. And verified as well. I think the thing with gold is that I haven't seen the US bond yield pushing higher, which is really dragging people towards gold. And I also wonder whether the Bitcoin situation actually pushed people back to gold. You know, as the panic came in with supposed digital gold. And again, mate, I agree with you about the use case scenario of Bitcoin. I still struggle to find out exactly what it is. But if it is about being digital gold, well, it hasn't really proved itself to be the case. You know, gold has been gold in the most recent times when we've seen the inflation picture come in. Not Bitcoin. You know, gold has been a better store of value over the last few weeks. So, you know, this certainly seems to be the commodity, if you like, of the moment, and the product of the moment, and probably the one that most people would wish that they were in. And I don't see it changing. You know, I see gold going right the way back up to its highs. Why not? Why not?
Well, once they get a roll on, yeah, it looks as though it's on its way, doesn't it?
It does. It
no
does.
retest yet, though. That's
no, and
that's
I'd like to
always a
see
concern.
that. Yeah, I'd like to see that first. You know, I'd like to see this area really fail and it draw back down and give us that inverted head and shoulders to kind of, you know, give us a nice clean entry. But that would start looking very attractive if it you know retested that area and gave us that pattern there.
Got to play the pivots apparently on this. Ainsley said that before. You know, she is a great believer in the levels that it does choose to roll off, and weekly pivot, as you pointed out before, is definitely one of those.
Yeah, yeah, it looks good. It does look good. But yeah, you know, same. So wait until the US session to see if gold and silver hold these positions. So John's looking at that. Anybody else got any trades that that they want to talk about or let us know about? That would be really good. And we will also talk about what's happening for the rest of the week. Interesting, really, as well, mate, because it's the end of the week, isn't it? It's the end of the month.
End of the month is nigh, yes.
End of the month is nigh. Preliminary GDP quarter on quarter, which is forecast to be a little boost with the US. Pending home sales forecast lower. Interestingly, I don't know. We should have to look at that. This is the one though. Core PCE price index. This is the one that that everybody's waiting for, and I wonder whether we're waiting for that number before we see some genuine market direction. I don't know, but this is the number that is of interest this week because this is an inflation number. So 1:30 tomorrow UK time suggests that the US session could be quite interesting. Sorry, not tomorrow, Friday, on Friday. So it might be quite quiet before then, mate. I don't know. University of Michigan's consumer sentiment as well. So there's actually a couple of numbers out on Friday. As much as they look like they're not important, actually these are going to give us a genuine gauge of where the global picture is. Price index and sentiment here, consumer sentiment. So it's going to give us an idea of where the picture is globally. But I suppose it won't matter to a degree if the central bank aren't going to be raising interest rates. What that will probably do is have a weakening effect on the dollar, pushing gold higher. So you know, further inflation numbers without a central bank moving would weaken this dollar. And this is what we've got really. I mean, you know, the dollar looked like it was creating an inverted head and shoulders, but it's really kind of can't use the word collapse, but it has destroyed the view that this was going higher.
Well, your chart looks way different to mine.
This is the index. This is the dollar index.
Yeah.
Yeah.
Oh no, I'm looking at the daily. That's why.
Okay. On the weekly. Yeah, that's the daily. Yeah.
Yeah, that breakout's not convincing, is it?
Which one down?
Right. Yeah, that one of the range. It's not convincing at all.
No, it's a kind of wait and see, isn't it? It's kind of wait and see what's going to happen.
Yeah, and that's why we're seeing the euro at the moment doing exactly the same thing. You know, have we got a false breakout or have we not? And that's what I'm sweating on, right?
Yeah. Well, nothing to do in that case, mate. I you know, as I say, the most obvious play right now seems to be gold, because if we are kind of in this inflationary area with a central bank which is not going to move, then that's really deflationary for the dollar, and it means the buying power of the dollar will weaken, because if prices are going up, but the central bank aren't willing to put interest rates up, then the dollar weakens, and inevitably then everybody starts flocking towards gold. So yeah, dollar yen, you're seeing upside. Let's have a quick look at that then.
Yeah, I could see that at the beginning of the week, but there's nothing, just absolutely nothing happening.
Yen's always a tricky one, because
prick of a thing. I mean, a damn thing to trade.
Yeah. Do you know, mate? I was watching something yesterday where somebody was trading gold, and they were just adding to positions to the upside, and it was on MT4. They just had it on YouTube on MT4, and they weren't talking. They just had a big musical thing going on in the background. Yep. I thought, well, why can't Jeff and I play some music?
Well, what you've got to do is obviously either own the music, or it's got to be Creative Commons or something like that, as far as I'm aware.
Yeah, maybe that's what they were doing. Let's have a look. Sticky area, and a pretty hideous looking. I mean, there's pattern again. You know, there always is, but there's patterns within patterns. There was a cup and handle here that hasn't played out. There was a head and shoulders that hasn't played out. There is now a triangle. Let's have a look at this one and see what's going on here. Kind of looks like a rising wedge, which is bearish. Might be through that level. It's not closed convincingly below. So is it there? Probably not. Might be down here now. It's a bit of a mess. It's very, very unclear what's going on here.
Agreed.
And
I've got a descending channel on the weekly and monthly chart that is showing me a false break on the weekly, but it's also showing me a break and retest on the monthly. So it's really, really difficult.
Yeah. And if you must notice this, mate, but everybody else in the room must notice as well that there is always 1 week, if not more, during the month, which actually you'd have been better off not trading, not getting out of bed for. This week feels a bit like that so far.
Well, if you look at that chart and you pick that up, that's a monthly chart. If you picked it up in January, February, March, April. If you picked it up in January, beginning of the year, you'd be doing okay, wouldn't you?
Yeah. Yeah, you absolutely would.
And there's your three white soldiers, or whatever you want to call them. That's pointing very, very much to the upside.
But this is the week's bar so far. I mean, I don't know whether if we went through everything, I'm not sure if it would look quite like that. Aussie CAD's had some decent upside, I suppose. Aussie Swissy, not really, a huge one. The yen's pretty good. This is back to where it started. Oh, okay, that's the Noki, but actually the Aussie Kiwi is the one. But I think that was a cause today, wasn't it? Pretty much.
It was. I was looking for upside in that. I was trying to buy it.
Interesting.
Please, I didn't get into
it. Interesting one, mate, wasn't it? We were talking about this Aussie Kiwi, and I said that the seasonal pattern showed. So, no, but that's not to say check that out. That I said that this is going up. I didn't say that at all. Always, it was just an observation that seasonally that the Kiwi tends to do better than the Australian dollar in this phase. Now, of course,
and I said at the time you might save my bacon by that.
Oh, did you not take the long? You didn't take the long?
No, I'm not in. No, I couldn't get in, and that's what I said. Fortunately for me, I couldn't get in.
Oh, mate. For John, you've raised your hand. Do you want to come on mic, John? Is that why you've raised your hand? Yeah, come on mic, mate. Yeah, no problem at all.
You can be Ainsley.
You can be Ainsley. Yeah. Oh gosh, do we have to give John power?
I'm in.
There we go.
Oh, turn the hand down. Yeah, no. Look, I very rarely place Ftse 100 trades because they scare the life out of me because it goes up and down like a. So I thought, right, now I'll do this, and I went in at market So there's a little bit of both you, and then you say, hold on, everybody, we're going to cut it. And I'm thinking, okay, no, you've got $3.52 on the table. Be a brave man and just watch what goes on. Because if you lose, it's $3.
Yeah.
Because I have lost more on trades. So I thought, get a grip. You know, this one you can learn from.
Yeah.
So if it gets back to the entry, I will just let it go. I did that with the Aussie Swiss. I took it and I thought, right, go low, don't put a lot on the table, and just be brave and watch it move down. Because I didn't take Jeff's monster trade from January, and I'm not regretting it, but I know now, having watched enough trades that people have taken and given it the probability that things work out in your favor over time has been proven.
Yes.
That's the beauty of the show. You can see, go, okay, I see a lot more about it. So
do you know what? One thing with it, John. Just the I just want to give you a slightly different spin on the Ftse. Where is it? Now, for me, with a Ftse, the lesson, if you're sort of mirroring what I'm doing, the lesson is to disassociate yourself with the money to the point that you just cut the trade, because it's about the process. So the process is going, doesn't look good anymore, get out. It's not about sort of accepting the $3 loss. It's accepting that you won't actually make money out of something. You know, there may well be money to be made here, but we just have to accept that the picture doesn't look the way it should. You know, if we're following this specific strategy, it needs to look this specific way. And if it doesn't look that specific way, then I don't want to be part of it, because I know that then I haven't got a basket of 20 trades that I can analyze. I've got 19 and one that I was doing something completely different with. So I need to really write a new strategy for. So the way to learn, if you're mirroring, not if you're not mirroring, that's different. But if the way to learn if you're mirroring is saying, the idea is, if the trade looks no good, you cut the trade, note down whether it would have been a winner or a loser, and then later on down the line you can make an assumption on whether you should be cutting trades or you shouldn't. Now, the analysis that I've done suggests to me that when the picture changes in a way that I no longer can predict, because the way that I foresaw the future was it going to 70-60 and not coming back inside. The future didn't do that. The present was different. So for me, I'm now into going, I need a different approach for this market. So that particular one's over, cut it out, and now I'll look for I'll look for a trade in a different way. So as I say, mate, it's not about the money, it's about the process.
Okay, that makes sense.
Yeah.
But that's why I've come on air, as it is, to actually say what I'm doing. Now you told me what you're doing. This environment, live, for real, with stuff on the table, is for me is a brilliant way to learn. Now you just explained, I'm thinking, right, okay, now I can see why you've gone out.
Yeah, and it's purely because of the process. Because the thing is, if we are unable to disassociate ourselves with the money, we will over celebrate when we make money, and we will over what would be the words? Commiserate, if you like, when we lose. And we shouldn't do either. What we should be doing is going, this is the process. And we've always said trading is boring, right? It should be boring. The only thing that makes it interesting is us. You know, that us together sort of having a chat and, and having a quiz and all this sort of thing. But really, trading should be, if you're doing it correctly, it should be quite, maybe boring is the wrong word, but it should be quite mechanical. Yeah, it should be quite mechanical, because, it's full of algorithms and computers now. So we need to go, take our emotions out of it. And don't get me wrong, it took me a few seconds to kind of go, right, I've got to accept that I'm not going to make anything for at least another what is it now, 9 o'clock. I don't see any news that's going to help me out. So I'm not going to make any money now until at least for another 5.5 hours until the US is online. So yeah, I'm not super keen on that either, but I know what I will be doing, and what I would have done if I wasn't on the show is that I would just turn everything off, and I would have gone and go and have a little bash on the drums, have a go on the piano, maybe go for a walk, and then do something else in my day. You know, do something else that I enjoy doing, and not be sat in front of the chart, which is not going to make me any money.
Yeah.
In fact, it's more likely to lose me money because I'll make a mistake.
Yeah, I've done that.
Yeah, yeah. Well, that's what it does, though, doesn't it? It
I haven't
starts
got
to
any drums, otherwise I would have done it myself. And I can't play the piano.
But it does start to eat away when
you've got your farm, Jack.
Yeah, I've got my bamboo flutes and my bamboo.
Oh, there you go.
Sticks and all the rest of it. I can go nuts with them.
But it does. It starts to eat away, doesn't it? When you sit in front of the charts. But how can it eat away on you if you're not in front of them? It can't. It has no power.
I've got better at it
because
I know I'm in a silver long trade. It's all happened now. Everything that's going to happen on the silver trade has happened in this hour. It'll calm down. It'll do nothing now until 8:30, and I'll catch it later on. Same as gold. They won't do anything much.
Yeah.
Until then, so I've got used to that. But yeah. No, it's quite brave for me to take a Ftse trade.
But mate, yeah, I think it's
great.
The
last time I took one, it went wrong. It was horribly disastrous. This is way before I did the show. Way before. Back in the beginning.
Well, it is both Jeff and my intention to make sure that if nothing else, people can just turn up and make some money. You know, I hope that, but of course, what we want is for everybody to get sort of like comfortable and educated enough that they can then do it on their own and sort of like, you know, have their own process. But if people aren't interested in learning, what I hope we can give is a way for people to pop into the show for an hour a day and make a bit of money, outstrip the bank and potentially better, and then go about their day. So if you've got a little bit of cash to put on the Ftse, then you know, I hope not to lead you down a losing path, mate. It's my responsibility.
To this, I've gone in on the smallest position I can.
Good.
And I have got a little level where, okay, you know, that's it. My stop loss is there. I've marked in my level of I've got a 70.27 and a 70.29. And then a 70.23, and it's bobbing around in that little area. And if it does that, and it's fine. If it gets to a point where it's the end, like 5 o'clock, is it 5 o'clock for me?
Yeah.
Then I'll be out. But I don't. I'm like you. I think it's going to go higher, but I don't know.
Well, I don't think it's going to go higher anymore. That's my problem.
Oh, you don't? Oh, I've got 80 cents a minute.
I don't. All I'm saying is it could. But now I look at it, I'm just there just going, I actually don't know which way it's going to go. Because
you're right at the level.
Yes.
You know, that's another reason I came. I thought, whoa, that's so cool. He's so right on that level.
Well, do you know,
bounced around on it.
So this is part of my approach, and you know, oftentimes I'm wrong, but sometimes I'm right. But part of the approach is trying to pick out the right price point. Because if we think that most of the market is now run by algorithms, then what I'm trying to do, similar to Jeff actually, is pick out where are either stops or where are orders, where are the orders sitting that give me the highest probability of a bounce. So I'm trying to pick out levels. And this 70.28 is just one of the levels that I see that it needs to take out to kind of, you know, be able to kind of go to the next level, to the upside. But what I will concede on is that I've picked the wrong level to get to, because evidently this, whoops, didn't mean to do that. This is the high point. And really, and when the show's done, I'm going to go back and figure out why, if I'm looking at first point of contact, why I'm looking here and not here, because this obviously is first point of contact. So it's a bit scruffy in here, but
can I ask something?
Yeah.
And I might, because I see it sometimes when I'm just, I've got a cup of tea and I'll follow the gold and silver chart because they move around a lot. You see, like now, there's got that high test bar, and then you've got a buying bar coming up on the other side of it. Sometimes that high test bar's green. The price action will then go the other way and it'll keep on going down. But sometimes it will come down like that, put a pin bar in like that, and then the next bar, it'll start to fill back in on that pin bar and carry on going back that way. So it's come down like that.
Yeah.
But then the next one's going to go up like that. I call it a filling in bar. Like this one's now, it's filling it in.
Yeah.
On gold and silver, I see that a lot.
Yeah.
Is that on gold and silver? Would that be like a market trap? People have seen that pin bar and they go, okay, right, we might go lower, and then they go lower, and all of a sudden, no, it's gone the other way. Is that a sort of a trap on gold and silver? It's not doing it on this one.
Yeah.
I'll give you some homework, John.
Cheers, boss. What you got?
On that,
I'll give
principle,
you a test tomorrow. Sorry.
Find some trend lines and some trade lines
Yeah.
that have got more than one of those on them. And if they're actually in a retracement phase, watch what happens after, because they're one of the most powerful things that you'll find.
Yeah, I agree. I just don't know how to read them. I'll be honest.
Well, we'll try that. When they're in a retracement phase, and so say you're in a strong trend, and you've got a uniform pullback like a channel, right? That use fibs, use whatever you want. But if you see those 2 or 3 of those on a trend line or a trade line in a retracement phase, look out. They're very powerful.
Okay. Yeah,
But don't trade them out of context, because they're also their own resistance, right?
I'm not saying it's going to happen, but there's a probability that later on in the US session, gold and silver will do that type of thing that I can see there. That it's I'm just pointing with the chart. It'll go down like that, and it looks like it's going this way. It'll put something else, and then it'll go the other way and fill it in. So I was just, I'm fascinated as to why that sort of thing can happen.
Yeah, I think it's a really interesting point, mate, and I think the word that Jeff used, which is the most poignant, is the context. And I think it's the same with everything. The bar matters, but it's not. It's not a bulletproof way to read price action. Lloyd and I have had discussions about this before, where I was talking about the candles, and I said to him, it's the purest way to read price action, because it's the only present indicator. All the other indicators are lagging. And he said quite rightly, well, it's a lagging indicator as well, because by the time the bar's formed, you're on to the next tick. So everything's lagging. You're always reading price action in real time. And what I read with bars, let's say this one up here, because we are at a high, what I'm reading with this is that there is enough selling up here to suggest that the high is going to hold. So then when if you do if you do want to take a trade here, the most sensible looking at this bar would be to sell it off. So you got a good probability. With this, because of where it is, I mean, the one thing I would say about it is that it does look like a lower high. So it looks like we're in a downtrend, because that we got this area here, we come down, and then it looks like this could be a lower high. So we do have a bar which could act as a signal. Now, with this particular bar, it's tested a high, but it's also kind of tested a low, and it's a little bit woolly. It's not very clean. It's not very clear. So I'm not sure whether I would use this particular bar for an entry, but if you were entering it, you'd be entering down there anyway. So the general picture here is for, if we're just concerned with the hourly, is for a downtrend, and we got this lower high here. the fact that price action is going to retest this level again, it doesn't negate what the message of this bar is telling us. Because what the message is that there's orders here that are ready to sell.
Right.
That's all it's really telling us. That's all the bar is telling us. That's all this bar told us, is that there was orders here that were ready to sell to this point. And then we have to make a judgment call to say, okay, do I want to put in an order here and go with what the crowd here is telling us, or do I want to just enter at the low? And it'd be the same here. What this is telling us is that there's orders here to get into the low. That already tells us that there is a potential shorting opportunity at 70.41 at this point here. There's a short opportunity here, and we also know by the way we understand bars that there may well be stops here that could enter us in short as well. So we got two potential entries here. That's the way I see it. And the only question we need to answer is, has this bar giving us the highest point of this lower high, not high low, sorry, has it given us the highest point of the lower high? If it has, this is a great place to enter. If it hasn't, it might not be. This trend might be turning around. So at this point, I'd want to make a choice on what I'm going to do at this price point. So I'm much more interested in looking at this over here when I see a bar, rather than the bar and the anatomy itself,
Okay.
Yeah, because it has given us information. It has given us the information that there is selling pressure here. So that suggests that there's algorithms that are sat here. So why not it be a strategy that I want to sell where the algorithms are? They've proven that there's some here, like they proved here and here and here, and eventually a little bit further down. So these are all sell zones, in my opinion. If we are, if we want to short the market, the top of these bars where it's rejected it once already is a sell zone, a great sell zone too. And this is why I put limit orders in, and this is why I'm trying to pick out levels, because what I'm trying to do is figure out where are the algorithms sitting. Now, it's pretty obvious when you draw a trend line. Like let's say that. When you draw a trend line, when you got confluence, that there are going to be orders sat here. Now, whether those orders get taken out or not, we don't know. But there's obviously all going to be orders there. And all what we've got to then decide is, do I want to get in on the first time it tests it and have the confidence that I've picked the right level? Or do I want to see a bar that says that's the point first and then put my order in? So it's a bit of a process of elimination, I think. But the first thing that I think I really like to do is pick out the price points. And if you pick the correct price points, you're going to find it very difficult not to make money in the market. Some of the price points are obvious because they're pivots and they're all over the place. Some of them are defined by where it's been rejected before. It's obviously the best message, and it's the cleanest message. Where is price being rejected? 70.41. So where is it likely to be rejected again? 70.41. What if it breaks 70.41? Probably going to 70.60. Or this high here. So the actual anatomy of the bar isn't as interesting to me as the extreme points on it.
And if we focus on the anatomy of the bar, then we do lose focus of that bigger picture and the real structure that we're looking at. Anything in isolation is very dangerous. Must have context.
Yeah, absolutely.
And Lewis, I agree with you. It's very tempting to scalp the Kiwi at the moment because it is in such a overbought position. Yeah.
Well, yeah. And again, look at this price point here. So if the Kiwis and this is where now the price is beyond this highest price point. So the way I'm reading it is, I don't care what this bar looks like particularly. But what I'm most interested in is this point here. And then when I go left, this point here. And when I go left, this point here. This is the last port of call, in my opinion, because that was the most extreme point where things started to fail. Now, if it breaks through this point, it's going here. So what that says to me is that if Lewis, you want to short it, or anybody wants to short the Kiwi, this is a great price. So what that it means you've got to put your stop loss in open air. because the chances are if it breaks through this, that it's going to go through that open air right up to the next high. So this is a great price, and it's a great way to trade. Pick the lowest point and try and get the same entry. Didn't happen there, didn't happen there. That was the lowest point, but you would have probably got entered in this one, and then bang, you've got the highest move, you know, when you pick the extremes. But if you're going to do that, you've got to make sure that you've set it out and go, I'm going to trade this for 20 trades, note down the results, and then I'm going to say that this is the defined way I'm going to trade from here on in. Not going, let's try this one today. That's just not the way to approach the market. You know, and look down here, would have been perfect. That's the most extreme point there, and it bounced to the upside. Wouldn't have got triggered in there, but you probably would have got triggered in here, and maybe here, maybe not, but you may well have got triggered in here, and it makes money. But it didn't make money here, but no big deal, because you put your stop loss in open air, and if it goes through your stop loss, then you've still lost the same amount. But these extreme points are, you know, they're a great way to do it. And this is the thing about reading charts. If we focus on the candles, we don't, as Jeff says, see the big picture. The big picture is anything that has some black above it or below it.
Just potential bounce points. They don't have to be horizontal levels. They can be pivots. They can be trend lines. They can be, as I say, yes, Lewis, they can be circles. As long as they're bouncing off something consistently, you know.
Yeah. And then you can overlay other things onto it. When you decide that that's going to be your approach, then you can go, right, now I'm going to figure out which currency pairs that I'm going to do this on. Has the Kiwi got news? Yes, it has. You know, what's been said. Now I'm going to go read the RBNZ statement, and I'm going to make a decision on whether this should be going up or down, or whether it's just a bit of fluff. If it's a bit of fluff, what I should be doing is looking for a short. And if I should be looking for a short, then this is a great price. This is as good a price as any to try and get the short on. So you can add things like that. I mean, I'm not saying you do, but you could add seasonality, you could add COT data, whatever it is. But to try and define a technical approach first is not a bad way round. But you've got to be really clear and clean on it, so you can start filtering out the rubbish. And that's what I did with the Ftse, John, to be fair. I have defined the way that I'm going to approach it, which is I'm going to trade the market open. It's got the highest volatility. It's the time I'm going to make my most money. I'm going to take my entry when I think the market is going in a specific direction, and I'm going to take my exit at first point of contact. If things don't work out that way, which is another reason I cut it, because I didn't get out at first point of contact, because I've maybe made a mistake on that, then I'm going to close the trade. And if I can get out of break even, I'm happy. If not, I'm going to have to take the loss. So I've defined those particular rules, and I'm going to follow them.
Yeah, it's good enough for me. I got out with 5 cents profit.
We're talking about.
No, live lesson is the best way to learn, because I was able to listen to sound advice, take my slap across the wrist, and get out and be a lesson learned.
Yeah, you know, and
to be fair, I know you trade in different ways, but I can start to see that you two don't really look. They're there, but it's not the actual bars are not. It's not the primary thing. I am than that.
It's the last thing, really.
Yeah, it is.
But I knew that I knew 14 months ago that this would take time. But the most important thing, I haven't blown an account up.
Yeah, exactly, mate. And it is about staying in the game. You know,
most of when ever been down is 5%.
That's good. Yeah, that is good.
I'm very grateful. I will see you tomorrow.
Yes. Is it quiz tomorrow? Yes, it is quiz tomorrow. Quiz tomorrow. Okay, mate, that's fantastic. Anything else to add? Jeff?
Yes, I have. I'm going to show you exactly what you just were talking about there, John, in terms of the candles, right? So here we have a setup on euro dollar on the H1 chart, right? One of those bars you spoke about, right? This case, a low test bar.
Yeah.
But for me, it's super dangerous to trade that right now. And the reason is because we're bang on that horizontal level and we haven't yet come back into that range. I would allow it to come back into the range and give me something else. However, and that's not in a retracement phase, is it? That's still in a bull run. But if you have a look at, if I go in a little bit tighter, and if you have a look in here, where you are in a retracement phase, you could probably use that one. And you're getting a warning here with this one, and then this one turns up, and then this one turns up, and you go straight through. You've got no room to take profit. Well, you've got room to take profit here. You've always got room to take profit if you want to take small profit. But that's the kind of thing I'm talking about. When you're in a retracement phase, as that is, it's a retracement on that run there, and in an overall bull trend, they are very, very powerful. Now, this is why I have to take profit early, right? You've got to take profit before these highs, or at these highs, most definitely, because you know what's going to happen next. It's going to retrace again, isn't it? 9 times out of 10, that's going to happen. But that's what you're looking for with those high test bars, and exactly the same going the other way with the low test bars. Once you're in that retracement phase, there's another one there. That's retracing on this. You've got 1, you've got 2, you've got 3 high test bars. You've got another little slingshot pattern there as well. And away she goes. So that's your homework, mate. See how many times that happens in retracement phases, and you'll be pleasantly surprised, because you'll find lots of them. Speaking of which, as I said, I'm not going to take that for that very reason. It's not in a retracement phase. But I'll be watching it if it does break and come back and retest, because don't forget, I'm bearish this. And it again goes to the point, if I haven't got the right context, yes, I'm bearish. Yes, I want to find a trade short. But if it's telling me that this is an upside down version of what I want to see, then I have to wait. Not every single one of these is gold.
Yeah. Again, I'm sorry to keep asking, which might be silly questions. You see that high test bar you pointed out?
This one?
No, there's like, I call it a pin bar. I could be completely wrong. It's quite a way back. It following the daily, following the pivot, 1 step back, 2, 3. It's quite a long way back.
After the rally, it's about 4 after the rally, right? After the big rally up.
Yeah.
The big rally up. This one.
Yeah, that one there, yeah.
So could I call that a retracement bar? I know it's not, but it is. Is that like price is retraced first and then it's carried on down? I know it's not necessarily the right thing, but price has retraced, doesn't it? And I know it's carried on afterwards.
It's tested. I know what you're saying. So when you say retrace, it's tested the level again.
Yeah. So sometimes I can get test and retrace.
Well, it's the same thing in a way. I mean, retracement is a return to somewhere, isn't it? So yeah, it doesn't matter what the wording is, but yeah, so it's retested the open of the bar's price, which again, if you think about it, is a sensible place for it to fail again. You know, if the 4 points on the bar of the most interesting are the open, the close, the high, and the low. Yeah. That one tested the open of the previous bar, and then it failed.
You know what it also is, John?
No, I'll be honest.
High is higher than the previous bar. Closed on or near its low.
Oh,
key reversal bar.
Key reversal bars. Yeah.
But yeah, going short there is fraught with danger as well. You know, you're trying to pick the high there, and it's really, really tough to do. But as a scalper, hell yeah, there'll be plenty of scalpers having a look at that.
Exactly.
And here's your exit point, the top of the range.
Yeah, there's messages. There are messages in there, because you start with that shooting star, high test bar, whatever we call it. Then you get an evening star pattern of the 3, so the white bar before it plus the bar we're talking about, and the next bar that closes, at or near the low of the white bar. So you get the evening star. So you get another message to say this is probably going lower. And then interestingly, the next bar tests the open of the next bar again. So another good area to go short on, where the algorithms are probably sitting. And then as Jeff says, it starts to collapse a bit after that, and it ends up testing where it came from. Again, where the algorithms are sitting. And if we consider that trading will be much more mathematical than ever before, because it is basically run by computers, it does give us some really nice levels to kind of aim for. And as long as we're good at picking levels, actually we'll be in really good shape. And that should be more what it's about than anything else.
Scalper Joe is probably not in the room now, but I'd love to hear his opinion on this, because that's his ballpark. This is where he lives, I should imagine, in this area here. I don't know. I'm not a scalper, but Lewis would like to be. I wouldn't mind being either, actually, but I'm not. I'm simply not, because it's too much for me. It's too hairy.
Yeah.
I heard from Ainsley, by the way.
Oh yeah.
And Ainsley, I'll just read the message I got. Where are we? Oh, I've chatted to her since. Sorry. Gold broken the magic 1900 level. Hooray! And yes, happy dancing. Oil kicking on and shrugging off the directives of the IEA. No more new coal, oil or gas projects after 2021. OPEC said, yeah, nah, sod off, and boom. There you
very
go.
succinct. Very good, mate.
So that's the analysis on gold and oil.
Okay, well let's wrap it up, mate. We're getting close to the half of the hour, so it's probably about the right time. Thanks, John. Appreciate you coming on, mate. I know it's you're saying you're asking silly questions. No questions silly, and actually, it's quite nice to talk through this stuff. I think for everybody, including Jeff and I. So thank you for that, mate.
Absolutely.
Thank you. See you tomorrow.
See you tomorrow. Yeah, see you for the quiz, which we will be back for in the morning, as always. So I will see you tomorrow as well, Jeff. See you guys in the room, and see you, Angel. Thank you so much, as always. And happy trading. Stay safe and keep your discipline.
Yep. Thank you, trading buddies. We'll see you tomorrow, and sharpen up your pencils, because it's quiz time.